Time for the word on Wall Street. Top investors watching your money. Joining me now, Kingsview Wealth Management Chief Investment Officer, Fox News contributor Scott Martin, UBS Financial Services Private Wealth Advisor Ali McCartney, and Strategic Wealth Partners President and CEO Mark Tepper. Good to see all of you this morning. Scott, let me kick it off with you. We're standing by for weekly jobless claims out at 8:30 a.m. Eastern Time. Investors, of course, also waiting on the August jobs report due out tomorrow. The expectation there, 750,000 jobs added to the economy, the unemployment rate ticking down to 5.2%. Scott, what are you watching for?
It all sounds awesome, doesn't it, Dagan? And I think these days, as you and that's Mark Tepper, if you're playing at home, have talked about all morning, there's a lot of variance in these data points now. It's just not the job numbers, it's consumer confidence numbers, it's PMI, it's even inflation, my goodness. So the reality is this, Dagan. I think the market is ready for, say, a stinker, to use a technical term here in the job market, because it's not all bad news, boys and girls, because what that means is that gives, I think we go back to Mark and I's, say, high school football days when we were studs, I think, right, Mark? This is the lead block that the Fed needs going forward to keep that stimulus train going. If we start getting stinky, again, to use that word, jobs numbers here, that allows the Fed to keep the spigot going as far as liquidity to the markets.
When you're talking about the Fed, Scott, before we move on, in terms of the political pressure on Jay Powell, I just wonder, and Tep can get in on this later as well. I just wonder, though, that won't the spigot stay wide open because maybe Jay Powell wants to get another, another term? Just real quick on that.
Yeah, another handful of years. Yeah, totally. And I think that's the interesting thing is maybe Jay Powell is actually hoping for some disappointing economic numbers so he can justify the liquidity. But let's face it. I mean, either maybe they didn't do the taper as soon as they think, or maybe they don't do the interest rate hikes as soon as they think. One or the other is not going to happen. So as far as the job numbers are concerned, I think the Fed has been right down the middle of the fairway. Another sports analogy, yes, it's early, with respect to how they're treating these markets and giving the markets what they need and what they expect. And that's why we're at or near all-time highs in the S&P and NASI.
Yeah, I dare you to work in a cricket analogy next time you come on. Ali, I want to move on to you. Let's talk about consumer confidence. August consumer confidence falling to its lowest level since February. And at the same time, we have companies like Costco announcing it's going to reinstate purchasing limits on select items because people, again, are stockpiling goods as COVID cases surge. Put this in perspective from a market or investor standpoint.
Yeah, there'll be no sports analogies here, I promise. I couldn't if I tried. Maybe lacrosse. I don't know how that works. But so, look, let's go back to last March when the recovery in the market, at least, was really heightened. And we said, all market participants said, this is not going to be a straight line recovery. And the truth is that between now and then, and very recently, it has been largely, both in terms of earnings, market numbers, and economic information, pretty much a straight line recovery. And now we sit at this inflection point where a lot of the things that we were concerned about that were those downside risks have surfaced. We have a variant that is taxing hospitals and concerning both consumers and producers yet again. We have severe weather. We have back to school, and we are past peak earnings. And so I think what a lot of the numbers that we've been seeing, both the ADP numbers we got yesterday, which were, half, 60% of what we were hoping for in terms of additional payrolls. I think the jobs number that we get tomorrow will reflect this as well. And consumer confidence, which we did get yesterday, which is the lowest number we've seen since February, which, think about it, that was like the ramp up of both confidence in the vaccination program. So we're now sitting at this lull where consumers aren't having checks deposited into their accounts, where everybody was, at least where I am in New York, the thought was everybody would be going back to New York in July, in August, in September. A lot of that has now been pushed forward as a result of the Delta variant into January. So, we have sort of gone like this, and now we're going to be here for a bit. And I think once we push through the Delta variant, once we have a sense of how, quote unquote, temporary or transient inflation is, once we have infrastructure kicking off and some more clarity in Washington, I think you will see another leg up.
Your dog's behind you, Allie, and we just love it. You can't.
He loves your show. He hears you talking about dogs, and there's nothing I can do.
No.
Keep him away from the camera.
It's been a morning for everybody here in the Northeast, so we love seeing our fluffy loved ones. Mark, we briefly mentioned the Fed before. Progressive lawmakers are calling on President Biden to replace Fed Chair Jay Powell, who has been campaigning for reappointment. Meantime, in a new Wall Street Journal op-ed, Judy Shelton calls on Congress to rein in the Federal Reserve, calling its power unchecked. Your thoughts on the future of the Fed? And my issue is progressives putting pressure on Jay Powell to be more tough, particularly on financial regulations, banking regulation. I just think that it adds a real uncertainty, not maybe about the role of the Fed that investors might be underestimating.
Yes, absolutely. So, look, I think the path of least resistance is to reappoint Jay Powell. Like my man Scotty Martin said, he's been right down the middle of the fairway. I think he's done a pretty good job. I disagree with his comments about inflation being transitory. I think it's going to be a little longer lasting than that, but that's a different story. When you look at Jay Powell, he's got public support from senators on both sides of the aisle. Even Janet Yellen supports his reappointment. And when you try to figure out what the market impact is going to be here, I think here's what investors need to know. If Powell isn't reappointed, the Fed's going to become even more dovish. So that should continue to prop up stock prices. And right now, it's essentially a two-person race between Powell and Brainerd. And Dagan, to your point, Brainerd is left-leaning enough that she could potentially transform the Fed's mandate. I mean, right now, it's all about full employment and price stability. She could align the Fed more with Biden's priorities on financial regulation and, of course, racial equality and climate change, right? But at the end of the day, here's what I think happens. I think Powell gets reappointed. I think Brainerd gets elevated to vice chair so that there's some extra influence there. And I think you'll end up getting more regulation in the financial system, probably a bit bearish for financials and crypto, but I think more of the same for everyone else.
Thank you so much, Mark. You sit right there. Scott Martin and Allie McCartney, thank you so much for being with us this morning. And hold that doggy close, Allie. Much more ahead this morning.
Tell them about the Chewy earnings.
Yeah, exactly. Much more ahead this morning.